All right. Hey, everybody. Dan Fitzpatrick here, stockmarketmentor.com. And today we're going to look at Goldman Sachs here. I'm starting with the weekly chart. I mean, I'd even go out to the monthly chart because this is what I want to show you. This little bowl pattern, whatever you want to call it. Why don't we just leave it there? Where this was the last high here in 2021. Falls down here, essentially creates a double bottom per se, a little bit higher this time around than that. But I mean, look, this was years ago. I'm not going to ask the chart to tell me that much, but you can see this has been grinding sideways for almost 3 years. This has been sideways. And so we're finally seeing again on this weekly chart. I think the 400 level is important just because it's 400. It's an even number. And people like that stuff. So this is a real key part here where the stock broke out. Volume was about average, not too super high, but not too low either. I would say it's Goldilocks volume, but isn't that kind of stretching this crap a little bit? It's just average volume. So then if we look at it on the daily chart going back the same period of time, this is a lot of chop and slop here. No question about it. But we do see this kind of bull here. Same kind of deal like that. And then you could look at this and say, well, that's kind of a handle there. I think we're really stretching things a little bit to say that's a handle. I would say maybe that's a handle. Okay, well, maybe that's stretching things a bit too. The bottom line, though, is do we really care? Like, does it really matter what it is? All I'm saying is the stock broke out here. Again, above 400 is where the real resistance level was. So it broke out here, rallied up to 420, came back to test 400-ish. It fell below there. You could say it's kind of a slingshot pattern where it came back a little bit lower than maybe you'd like for it to have come underneath the 50, but it was only there for one day. It was spent a cup of coffee around. Hopefully it wasn't Starbucks, because then it probably went broke. And I could go on about Starbucks forever, but I'm not gonna. But it came down below the 50-day moving average and stayed a day, and then ran right back up. And ever since then, it's been going. And if you look at the green skyscrapers here, the biggest volume bars are green ones. Okay, this is institutional buying. And so I like Goldman Sachs. It's kind of, candidly, it's kind of tough to buy it right here just because it's already, it's run a fair amount. It's run 10%. And for a bank, that's kind of a lot. For MicroStrategy, that's in a minute. But for a bank, it's kind of a lot. I would prefer to maybe take it a little bit on a pullback. But frankly, if you just said, well, I want to start a position here, just a small position, I would say, well, I'm assuming you're more of an investor then, and you're looking at this, because if you're a trader, it is better to wait for even just a little pullback, maybe a $10 pullback, something to get it in this kind of trading range from there and there. So anyway, so I hope this helps. By the way, I'm going to be on the IBD podcast. It's going to be out on Thursday. Hope that you'll tune into that. I always have fun with Arusha and Justin. It's been quite a while. Also, I did a very long, almost an hour and a half training session for our members. So if you are not a member of Stock Market Mentor, then guess what? You're missing that. Why don't you fix that for $7? You can make that trade right now. Okay, that's one commission, at least on the commissions that you used to pay. So check it out. I'll see you then.